Hello, welcome to the Voice podcast from NorthernInvest Technologies. My name is Heath Thapa, and today I'm going to be giving you a market update in terms of what we are looking at in 2026 and how the year has started overall. From an tech perspective, what we are looking at is that we have a lot of AI innovation headlines that is definitely dominated in 2025, and we are seeing that same trend following in 2026. However, the tech sector is down 3 to 4% YTD, lagging the overall broader market. I think this has to do with the Max 7, and Max 7 has been sold, or they have been actually kind of range bound. Some of them have been sold, but we do see that there is definitely a upside potential in some of the names, but we have seen generally overall the Max 7 hasn't been doing really well. There could be many reasons. One of the reasons that we are seeing is that investors or the market is trying to broaden the exposure overall from the mega cap tech, and they are actually shifting their capital towards more cyclical, defensive, or even a physical asset sectors. This could be more of an indication of securing their capital and making sure that they are putting their capital in more secure places than in just the growth stocks. We have seen the AI narrative being transitioned in 2023 to 2025 as an AI build-up cycle with all the infrastructure, semis, and picks and shovels. But now what we are seeing in 2026 is to understand how the implementation cycle of the AI is going to take place, especially from the enterprise adoption standpoint, monetization standpoint, and also from an overall ROI standpoint. So that makes it more important for us to look at the overall earning cycles in coming quarters. This quarter we have seen a lot of turbulence overall, with the IT application software selling off sharply based on the Q4 results of 2025. Will this continue? I don't think that we have more downside on these tech, especially on the IT company sector, which has been oversold a lot. We see that there is definitely a bounce back, but we don't see a huge potential for going back to their highs in 2024 and 2025. So this comes back to the fact that we are looking at the fundamentals and the price actions. Okay, and if you're looking at the tech sector, we did see a very strong earning, but we see that communication services, IT, and the Max 7 continues to deliver best-in-class revenue and earnings growth. If they keep continuing doing this going forward, I think we will see some upside, but that is something that we have to keep in mind or keep watching as the earnings come along. The price, the stock price reaction has been kind of muted overall. The markets are, forward looking and questioning about the visibility of the overall, future AI monetization, the risk reward, given the elevated, the capital intensity. So this disconnect kind of suggests the valuation versus expectation, how the earnings weaknesses are driving the overall underperformance. Okay, and I think the major theme this time around is about the overall capex surge. We have seen a very higher than expected 2026 capital expenditure, rising capital intensity tied to the AI infrastructure. So what we are seeing is whether there is going to be a thesis change in 2026. That is something that we can see later in the second half of 2026, but we are not sure yet whether we're gonna have that or not. But that's something that we'll have to keep an eye on it. And it also something that we need to keep in mind is the companies that are going to deliver the meaningful top line growth in the next 6 to 12 months period. So it's very important to look at, again, the earnings, the ROIs, the capital investment they are making, and how it's going to turn into the overall returns for the investors. From a software sell-off standpoint, the one that we have seen in past like 2 or 3 months now It's almost like 30% down YTD for some of the names. This is definitely driven by the AI uncertainty around the business model and how it's going to impact. We have seen a high correlation sell-off across all the sectors. There's a limited differentiation in investor positioning, like sector-wide de-risking factors to more like a stock level dispersion. So investors are beginning to look for selective opportunities rather than selling the entire group indiscriminately. From a semis versus software trade as well, we saw that there's kind of a broad shift as well from software to semis. The spread has widened a lot in past week, but I think we're going to see that spread is going to narrow down a little bit. But investors are becoming more and more tactical, in terms of how they are going to be investing in semis and software tools. The future returns likely to drive by, again, stock selection rather than the sector beta. Okay, so it's very important to be on the good names rather than picking the overall sector in general. And the AI narrative is going to be more volatile in 2026. We are in a AI kind of a decade-long structural theme. But the narratives can swing extremely, and it can bring a lot of volatility in the market. Now, investors needs to again believe in 3 to 12 months time horizon and see how things will change. You gotta stay flexible. You gotta avoid rigid convictions, and you have to accept accelerating change velocities. Okay, so this biggest risk is anchoring to outdated assumptions. So make sure that you are more flexible. So from here onwards, I think we have to make sure that you are going to look for evaluation, look for earning growth on certain names, even from MacCap or even from any of the sectors, IT sector company. Our Nasdaq is definitely lagging Russell by around 8 to 9% YTD. So we are going to see Nasdaq coming up, but now we don't know what kind of percentage gain it's going to have overall in terms of the annual return. I don't think we're going to see the same returns as we saw in 2024 2025, but 2026 is going to be more challenging year for the tech sector. Overall, what we are going to be watching this year is definitely the earnings cycle from both software and semiconductor companies. Overall macro and geopolitical development as well. We're going to see how the Trump policy is going to be affecting geopolitical issues and development overall in the broader economies of the world, and that's something that we'll be keeping an eye on. This is the update from NorthernInvest Technologies. Catch you guys later. Thank you.